Hi, welcome to the Market Alert for Wednesday, the 17th of June 2020. Just before I get into the Market Alert, a few announcements. We're adding alerts into the software. They should be available on Monday in an update. And the other thing is I did record a lot of trading examples back in January and February, and for some reason I can't find them. So I'm currently recording more to take you through the steps of the trade, and they will be added to the website during the next few days as well. The settings remain the same at the moment for the software as well, so no change there, although the volatility is picking up, so I'll be reviewing this also if this continues. Okay, let's get into yesterday. We saw that stocks saw as miracle cure and recovery hype Trump's second wave of COVID concerns and World War III fears. Just talk about the World War III fears. As Gerald Celente said in his Trends Journal, for the last 20 plus years, if not longer, when all else fails, they take you to war. And we've seen this time and again, but fingers crossed we don't go down this pathway. But that's what this is alluding to there. But also the graphic underneath, miracle cure, truly amazing. Works in minutes. Yeah, if Powell says something, the markets will move either up or down. On another note, for yesterday, before we do move on, we had the core retail sales yesterday from the US, and also the claimant count change, which saw another 600,000 added to the UK jobless figures. Let's just have a look at the retail figures again, because the twilight zone once again made an appearance. If we look here, you can see over the last 3 months we've got some spikes up and down, but this again, this sort of miraculous recovery that we see for yesterday, or for May, is quite exceptional, because interestingly enough, all the way back to 2004, you'll never see a recovery like it, given that 40 million people had lost their jobs. And here we have a 12.5% recovery when there was not 12.5 million, 12.5% when there was a forecast of 5%. So again, like I say, the twilight zone is once again putting in an appearance. You've never seen anything quite like this. And while we're here, let's just have a quick look at the UK jobless claims. Used to do in the US ones there. So you can see unemployment claims, and again, it's going to get worse. There's no doubts about that. There is no V-shaped recovery. There is no normal going back to how we were before March the 24th, when we were all locked up. So this is the new normal. Get used to it, because that's how it's going to be. And I say economically, it's only going to get worse with the money printing and the madness that we're seeing at the moment by the central banks. With interest rates, printing of money, etc. So let's have a look yesterday. We'll start off with the Dow. We can see that prices were moved higher, but this became a bit of a damp squib when Powell spoke yesterday afternoon. He's speaking again today at 5 p.m. if I recall. We'll have a look in a moment. And yesterday he spoke for about 3 or 4 hours. I mean, it was relentless, being grilled about what he's going to do. I didn't watch a single word of it. There's no point, because we know where it ends. It all ends badly. And you can see yesterday the market wasn't really accepting it. We're back below the 200 MA, and we're seeing prices also below this on the overnight. So let's have a look at the 5-minute charts. You can see in the pre-market session with the wonderful retail sales, prices were moved up 500 points. And then as soon as we got to 230, the market opened and moved lower. We see a bit of buying coming in here, and then prices failing at the 20-bar moving average. I don't know what Powell said here, but it sent the market into a free fall, and then prices managed to retrace 50% of the move by the end of the session at one point, but not completely, because you can see the prices are not doing the usual rally into the finish. And then overnight prices are stuck in a bit of a range at the moment, desperate to move higher. They will need to close above the DP level and the 200 MA if they are to move higher. Now, as I just said, Powell is to speak again, but at 5 p.m. today. Yesterday, he interrupted the trading session at 2 p.m. You should never trade when you've got high impact news items, particularly when the Fed chair is out speaking. Just wind this chart back. This is the DAX. Let's have a look at the daily chart. Always like to have a look at the bigger picture first. Now, unlike the Dow, the DAX is actually back above the 200 MA at the moment, and also the 5-bar moving average, and also the 20-bar moving average. And you can see there prices sideways to higher. However, if they are to move higher, you need to close above the 78% there. But it's obviously going to follow the Dow, which again we'll look at in just a moment. So yesterday morning, the market once again moves lower. We see some buying coming into the market, supported. Then it becomes really choppy. Prices trade up to the 200 MA. Then we have a sell signal where we saw the market move lower. And if I just mark this up, you will see the market stopping at the BRN, which you've got plenty of support to the left. At this point, it was a matter of taking profits, but of course, as soon as I exit the market, prices move lower. And the reason being is when we came down to the BRN, we didn't drive through. It took another bar before prices drove through. However, prices weren't closing back above the 5-bar moving average there, but nonetheless, it could have quite easily seen prices move back, and they are the rules that I'm currently using. So if the prices don't drive through the scalp figure, the first profit target, then I tend to think, right, it's not got the energy, so it'll likely to reverse or move sideways. So prices did move lower. They came down to the close, and then we have a classic retracement there. We see the green buying coming back into the market, and then prices moving back to the upside. So in the second trade there, we see prices driving through the scalp. So that means we can actually start to trail the stop. And this is one of the examples I recorded yesterday that I'll put in the onto the website. And then, of course, it came straight back and took me out with a profit before then continuing to the upside, which is a shame because it was starting to move up quite nicely. But we just had this sharp move to the downside, take out those that had stops close, of which I was one just under the BRN, just to see if the market would hold at this level, as it had done over here. So a pretty good place, but no, it was a quick whip to the downside and then back to the upside, where the market continued to produce further profits there. So that was the morning session. The afternoon session, there are two trades, but Powell was speaking from 3 p.m. And as I say, you really don't want to be in the market when Powell is speaking, or there is, it used to be a case of interest rate comments, but as interest rates will be negative by the end of the year, and they're virtually non-existent, that doesn't really matter anymore. It's a case of how much more money they're going to print and what other scheme they're going to come up with to keep printing and keep the economy going. But had you have traded these, the first one was a loser, the second one was a slow grind to the upside, but not something that you want to trade, as I've said before, as when the Fed are speaking, as you'll see here, you can be in a nice situation or a nice trade, and then all of a sudden, bang, so he says something and the market falls apart. So today we've got a better situation. He's not speaking until 5, so the market will trade nice and steady in one direction or the other, I hope, from 2:30, and that way it will be a nice trade before he actually speaks, and will be finished, of course, by 4 p.m. anyway. The DAX on the overnight is also sideways, but currently above the DP and the 200 MA there at the moment. Okay, I think that's it. The implied volatility looking slightly sort of sideways to lower, which is indicative of being a bit bullish. But there is some weakness around at the moment, particularly in the Dow. in the daily chart. If we just have a look, you can see there we've got a problem with the 200 MA, and that's a bit of a concern for the major market there. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next